Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, January 14th. Okay, before I get started and forget, President-elect Joe Biden is going to be announcing his stimulus plan today. I don't know the time. I would imagine it would be in the afternoon sometime, but I'm not sure. Or, they may release the notes ahead of the actual event, so reporters have all that stuff. I don't know how exactly that works, but I was reading some news sources that said initially he had gone to Chuck Schumer in the Senate, who's going to be the majority leader in the new Congress. He went to him with a $1.2 trillion program, and Schumer said that wasn't big enough and to go back and try again. So I think we're going to see something in the 2.2, let's just say between 2 trillion and 2.5 trillion. So we know more is on the way. The breakdown of it, we won't know. He may spell that all out. I have no idea. The thing I don't know is all that already cooked into the market, that people are anticipating that there's going to be more and more spending. That may be largely already in the averages at this point. Very hard to tell. But the good news is, with our trading strategy and our trading program, we don't have to guess, what that package will be and the impact it may have on the markets. All we got to do is look at price, and that'll be the arbiter of what it thinks of the package, or where we're at. So here on SPY yesterday, we just spent time in this consolidation box. It doesn't mean there wasn't money to be made. You can see here on the opening candle. Well, I'm not even sure if that was the opening candle. It may have been right here. But shortly after the open, you had a reach back touch to the bottom of the box at 378. And, as we've discussed, at the bottom of the range at support is an objective buying location. And if you did that, you just sat there the rest of the way, and you eventually got a touch of 381. So that was $3. Nice little trade. If you were ready for it, making that move. So that was that. So we're in this consolidation area. I really think to, get more traction, or to have the path open up, we're going to want to see a breakout above 381, and I would be a buyer there. I note up here, a high-level bull PPO cross would point to higher prices. Whenever you have a high-level cross on the momentum scale and then turn bullish up here, versus down here, you're going to get that acceleration to the upside, and that would be a very positive bull move. And notice that RSI has been bullish the whole time, not overbought at all. So definitely room to the upside. Now, if we break below this 378, then it's a different ball game, because we're going to come down here to 376 right away and possibly fill that gap down to 374. So, breaks above or below this consolidation box will be what you're looking for in terms of a bolder move, a more unidirectional move, where you could shoot against the top of the gap or shoot against the bottom of the gap here for a move down. So here I've got this intermediate trend line. I think this morning, if you're nimble and you want to take that trade on a break of this trend line and shoot for 378, that's fine. But the real breakdown level on the short side is 378. To get short there and ride it down. if you got short on the break of this trend line, I would be looking to cover at 378 because that's where it's been holding. And then if you're wrong, you reinitiate your short against 378. Notice the posture of the PPO. We came down with this gentle reset, all in here, had a little up move, and now wavering. If this were to roll over and then drop below the zero line, then you're probably going to be seeing price with some downward pressure into these areas that we just talked about. So when you're watching price, keep an eye on your momentum and relative strength indicators, because they'll tell you and help confirm the move. So if you see a down move here and then you get a break of 50 and you have PPO rolling over, that should give you more confidence in that trade to be short. Qs. In the morning, you had a couple chances here at 314, and then it lifted up to 316. Not a real exciting trade. I think here this morning, your buy triggers are a move into the gap at 317.20 or down here at 314, where you can either try a long at support or be patient and see if it breaks through, and then you can get short. Here, right in the middle of the range, that's a tough trade to take. Here on the 30-minute chart, price is sitting on this little ledge right here at 316, 315.75. A break below, I think you can be short for a run down to 314, possibly retag this low at 312.50, or if it looks like it's stabilizing, you can be long against 316 and look for a move up to the gap, and hopefully you get that gap fill. So I looked at futures, and the Qs are down a little bit, but mostly flatline. So unless something changes over the next 3 hours, I'm sitting here at 6:30. I think 316 is your pivot for active traders. IWM, 2 hour. We had price recapturing this channel. Up at the top, showed a little weakness yesterday, coming back to this 210 area. Let me just go to the 30-minute chart because it's easier. Here we are. We had this uptrend from the other day. Then we dropped below and back tested it, came up to the same level, and then rolled down right here at 209.50. I saw on futures for IWM up about 0.7%. So if that holds, we're going to be up in this 210 area. And I think for today, a good pivot is this 209.50 right in here. As long as it stays above that, you can stay long. If it drops below, I think you come down here to 208 pretty fast. And then that's a larger support level. So until that breaks, or if it breaks, you come down to this 205.25 and then possibly 204. But first things first, as long as it holds 209.50, I think you're fine if you're long. And on a break below, I would be looking to get short on tactical trades. Okay, Facebook. Daily time frame here. It did absolutely nothing yesterday, which, that's what you'd expect. Sitting on the 200, waiting for confirmation which way does it want to go. Now, I looked up earnings, and it's on the 27th. So that's about 2.5 weeks out. Right here, right now, the asymmetric trade is to get long against 250, because unless there's a catalyst, unless there's, a market breakdown, I think the odds are that the 200 holds until earnings. So if you wanted to, as more of a swing trade, go out to that January 29th expiration. Get yourself, a couple calls, and then set your stop just below 250. Say 247.50. That way, you've got all this upside to play with. If there's, if it runs into earnings, it wouldn't take much to get you profitable over the next 2.5 weeks, as long as the 200 holds. And if it doesn't hold, you got a paper cut, and then you can flip bearish if you want. But I think in front of earnings, they hold it together and don't let it go below the 200. Apple, quickly, I think, made progress right into this gap and then held right at 131. I looked in the pre-market. It's trading right around 130. I think below 131, you can play short for a move back towards 128.50. But above 131, I think you want to be long for this gap fill and potential, bull flag move. Here's your flagpole. Here's your flag. And get that breakout above 131, and then look for a gap fill to 132 and possibly 134 if it can take out the top of the gap. Tesla didn't do a whole lot yesterday. Just came back up, back touched this intermediate trend line that we had, playing around here right at the bottom of the gap. I think your toggle, your pivot point, is 854, call it 854.50. Above that, you've got $20 gap to fill, and below that, I'd expect it to roll over here towards 825, something like that, right down at this pivot. Actually, it's 827 is this level right here, right where this trend line comes in. So I think the bottom of this gap, 854.50, is your pivot. Microsoft. I was looking pre-market and it was down like $2, all the way down here just above 214. So I don't know what's going on there. But be that as it may, if it does open around 214, as long as that holds, that's an objective long. But if it breaks, you got a fast $2 of downside to 212. I would be getting short on a break at 214, but just seeing how it behaves, I don't know why it would be down $2 ahead of the bell. But then you'll have a gap above. They may go up and try to fill that and then bring it back down, or it may be a head fake. But regardless, stay long above 214. If it recaptures 217.50, that would be another buy point with a gap to fill above. And your areas for objective shorts would be losing 214 or a stall out at 217.50. Amazon was making some noise yesterday, and I wanted to point out on this trade the objective buy triggers that we had yesterday. we opened down, right, tagged into 31.20. Your first buy level was the recapture of 31.30. Keep that trading tenet always at the top of your mind. Recapturing a level from below is bullish, and that's a buy. Your second objective buy, this 31.50 that's been on the board for the last 3 months, recaptured. That's a buy point. If you were away from your desk and getting a cup of coffee, another buy point would be the gap entry at 31.56 right here. And then you got a quick gap fill up here to 31.80. So, I've been calling it the free 50 club. When you get the move, it's been going about $50. Now, it doesn't do that every day, but when it decides to move, you've got these, $50 increments. Here we had a gap, but at each level, it was very objective. And the nice thing about that yesterday was no shakeout candles, no, scary reversals that you had to really sit tight to stay in the trade. This was straight up to fill the gap, and then it rolled over. So, anyways, some really nice, clean buy triggers yesterday on Amazon. Google didn't do anything yesterday. I don't even know if there was a trade to take in all of this mess. But coming up here to 17.55, that was an objective level that if it broke above, you wanted to get long, but as long as it stayed below, if you were motivated to do so, you could have initiated a short against this 17.55 level. Now let's look at where we're at. To me, this looks a lot like a bear flag. Here's your flagpole. Here's your flag. Now, if price were to drop out of this morning, down into 17.40, I think you can get short on a break of this flag and then look for a move down to 17.50. So I think that's a viable trade, and you'd have to set your stop like at yesterday's close. Let's see. 17.47. So you would have $7 of risk and $30 of downside. If it played out to come down here and tag it. So that's a 4-to-1. That's pretty good. And if you're nimble and you get that first down move, then you can immediately move your stop down to where if it reverses, you just, have a scratch trade or you made a little bit. So that might be a way to play it with this bear flag setup. Netflix. Here's another one that just blew out of the gate. We had talked about this yesterday. This was definitely a buy point here at 500, the bottom of the gap, where it also took out downtrend resistance. So I think this was your initial buy point on the gap entry. And then you got a quick gap fill and a breakout above and a reach into 512 that got turned away. So that would have been a nice little trade. So here, as it consolidates and flags above the gap, you stay long against 506.50 right here, and look for a continuation of this bull flag to come up into this 513, and then look for the gap fill to 520. So I don't think this move is over. I mean, this is a bullish look for sure. I think it would take, the market pulling back for this to just, roll over and fail at this point. I would expect at least one last push up into 512. And there I think you'll see if the stock has any horsepower to punch through and then fill the gap. Okay, I've got several setups for you this morning. Some things that caught my eye. Stay. This is Extended Stay America Hotel. Yesterday, popped into the prior trading range above 1450. And the reason I compressed the scale, I went back a couple years. I just wanted to show you where the prior trades were, where the prior highs were, because when you re-enter that trading range from below, that's a bullish move, and then the target becomes the opposite side of the box up here at 17. And another thing yesterday, somebody stepped in at 6 minutes before the bell at 3:54 yesterday and bought 3,200 of the February 15 spot 65 calls. I don't know why the calls are set up that way. Maybe they had to make some kind of an adjustment to the option chain. So, and that 3,200 represents 20x the normal call volume. So that has me a little intrigued. I mean, who decides at 5 minutes before the bell that they're going to go out and buy 3,200 of a stock that trades 150 a day? Does he know something? Not sure. Do I want to pay to find out? Maybe. I don't have a position yet, but I'm thinking about it. And if you wanted to, you could take a position and be long against 1450. Now, remember, talking about knowing something, I know the information I gave you was not actionable yesterday, but I didn't know it at the time. The Intel, in yesterday's Profit Compass, I shared the unusual call buying in Intel, right? Some of it was short dated, others of it out in time, but there was a lot of call buying on Tuesday, into the bell, into the close, all day. Everybody getting long this dead stock, right? And then yesterday morning, they announced that the CEO's leaving to spend more time with his family, and the guy from VMware, a former Intel hotshot, is coming back to run the company. So there are no secrets out there. People knew that was going to happen, and that's where you get the call buying. Now, are they sometimes wrong? Yeah, they are. But a lot of times they aren't. So, does this guy know something or not know something? The thing that I like about this trade is it stands on its own merits. Whether that guy was there or not, price has broken in to the prior trading range. So even if that option activity wasn't there, this is a bullish technical setup. So whenever you can get more factors supporting the trade, the better. So here we've got a bullish technical look plus some unusual options activity. So that makes it kind of interesting. DraftKings. Correction. Grind higher. Symmetrical triangle. pressing against 55. I have an alarm at 55.50 to get long. And I'm going to take that trade if and when we get it. It may roll over here, back to trend and have one more oscillation cycle, or it may pop today. Who knows? But I have that alarmed, and I want to get long DraftKings. The target would be the prior high at 64. And of course, we're going to need to look to see when earnings are. I have not looked that up yet. So I like DraftKings long on a breakout. Hawaiian Airlines. Consolidation box, $4 wide. It has earnings next week. I have an alarm at 21.50 to get long. Look at the big price void. $5 wide up to, actually $6 wide. 21.50 to 27.50. That's $6. Whenever it happens, I want to get long on the entry into this price void. Okay? If you wanted to, you could take a position now, as it's above all its moving averages, and just see what happens here, $1.50 higher. I don't think I'm going to do that. Just personal preference. It's not wrong. But, I wanted to share with you, every trader has his own memories. Las Vegas Sands had a setup similar to this. And when price was, up at the top of the box, I even said it at the time, I'm front running this a little bit, but I think it's going to break out. Well, it didn't break out. It rolled over. So I got hung with, calls because I bought before the breakout and then it was rejected. So, front running signals does have its risks. So that's fresh in my memory. I'm going to wait for the breakout because this is the easy trade to get long on the breakout with all this being support below and then look for that $6 move. So anyways, another way to play is just to play the airlines. There's quite a number that are setting up in interesting fashion. I don't think they're quite there yet, but there's also this massive void on jets from 24 to 30. So there's a $6 void. If you wanted to take a position ahead of all these airline earnings and you have a bullish outlook and you wanted to get long here, like I just said, you certainly could do that. But you've got this, downtrend resistance, then you've got this lateral resistance to deal with. And, for my money right here, right now, I think I'm going to wait. But regardless of how you play, whether it's Hawaiian or jets, all the airlines have similar voids above them. And I think price will move very quickly once you get that breakout. Lastly, to wrap up, Camping World Holdings. Big move off the floor. And then a 5-month consolidation down here. Now, the last 3 days, we had 2 igniting candles stacked that took out the downtrend resistance, that also took out the lateral resistance here at 30.50. I think this sets up as a long. I like it long. I don't have a position yet, but I find it very interesting. Certainly very objective. I mean, here's your support. Get long against 30 spot 50. Set your stop just below. and then look for a move up into the mid 30s on this. I like the 2 igniting candles. I like that price is above all the moving averages. I like that price broke a long-standing downtrend resistance. And I like the fact that it took out lateral resistance. So this setup has a lot of stuff going for it. All of it bullish. So I like Camping World Holdings long. And I was reading some information on that leisure segment, the RV segment, and they anticipate a very strong 21. So I like Camping World Holdings here on the long side. So again, Friday is OPEX, January options expiration. Please make sure you know what you have. That don't let any unfinished business go into that Friday and you forget it in the shuffle. We got Biden sometime today with a stimulus package. That could be a market mover. I mean, if he walks in there with a $3 trillion program and just freaking floors everybody, we could have a moonshot situation. If it's already in the market, I think we'll see that too. But I think they're going to, I think they're going to be on the large side, not the small side. So that's something to watch. And then we have options expiration roll off next week. And to be honest, that's a little concerning for me. The week after OPEX is often marks a inflection point in the market. Doesn't always. We could just keep going higher from here. But on the blog post, I showed some graphics on, the weekly call buying is getting ridiculous and getting worse or more intense every week. A lot of speculation out there. A lot of stocks going all over the place. And, I wouldn't want to see you go into next week, like basically all in. Keep some dry powder out there. Roll up your strikes and book some profits if you're sitting deep in the money. I think that would be the smart thing to do. You may want to sell some call spreads. If you're sitting in naked calls, put a spread on. And then if we go higher, you're fine. But if we wobble, those spreads will not be as volatile as just having naked calls. So we got that on the horizon, but we got another day and a half to worry about it and think about it. So let's see what we do with Biden, and then we'll take it from there. If you're new to the channel, I hope you like the content. I work hard every morning to set the table for you. If you're an active trader with the key levels, I think if you look back on the work and see where the levels have been, I think they've been pretty helpful if you're an active trader. And that opens up your mind to focus on execution. If you go over in the show notes, you'll find places to register for the blog and register for all my content. You'll get everything sent right to your mailbox in the morning, and you'll get a nice invite link to our chat room, which is really become vibrant over the just since the new year. A lot of new faces, a lot of fresh ideas, and a lot of good companionship and camaraderie amongst like-minded traders. So, and that's a good thing. I hope to see you there. So, until we speak the next time, have a good trading day. This has been Chris Buss with Traders Profit Compass. Have a good morning.